Hello and welcome back to another episode of Majlis and Markets. I am your host Hassan Javraj. Join us for insightful conversations with leaders in Islamic and global markets. Don't forget to like, share and subscribe. You can also reach us at hassan@majlisandmarkets.com and follow us on LinkedIn. Today, we're talking about Islamic finance. This year, Islamic finance has grown rapidly, with record sukuk issuances and a push into green and sustainable finance. Whilst the industry is set to reach $6 trillion by 2027, challenges like rising costs, harmonisation, and AAOIFI's new Sharia Standard 62 loom large. In this episode, we're joined by Mohammed Damak, Global Head of Islamic Finance at S&P Global Ratings. He'll explain the opportunities, challenges, and what 2025 might hold for Islamic finance. Mohammed Damak, welcome to Majlis and Markets. Great to have you here.
Thank you for having me, Hassan.
Mohammed, you've got like a really interesting background. I've known you for quite a while, and you're a really well-known person in the Islamic finance industry and indeed in the ratings agency industry. And I think your background, not just at S&P, but at the AFDB, African Development Bank, and also your PhD as well back in France is really interesting. But before we get into all of that, could you give our listeners your early life and your background story?
Yeah, no, absolutely. Again, thank you for having me. I think I did the master's in Tunis in financial institution management at École Supérieure de Commerce of Tunis. And then I did the master's in money, banking, and finance. Here I tried to add the macro angle because with my master's in Tunisia, I was good at doing financial analysis, but I was really lacking the macro angle, which I tried to add. And then I did a PhD on ratings, so not a surprise that I'm working for a rating agency. And the topic of my thesis was the impact of rating actions on stock prices. And I tried to reconstitute the ratings of sovereigns, financial institutions, corporates, and then I tried to study how the market reacts to rating agencies' announcements.
Fantastic. And Mohammed, just if we take a little step back, what was life? I guess you grew up in Tunisia, in the 90s?
Yes.
And what was life like back then in Tunisia?
It was great. I mean, it was great. So I did my studies there. I grew up in Tunis. And then obviously after I graduated, I went to Paris to continue my studies. And this is where I did the master's and the PhD.
And then after the PhD, Mohammed, what did you do?
Right. After the PhD, I started with S&P Global Ratings. So I joined S&P Global Ratings in early 2006. When I was in charge of financial institutions in the Middle East and North Africa. And this is how I came to discover Islamic finance. So at that time, I was covering a portfolio of banks in North Africa and in the Middle East, primarily the GCC countries, but also some of the Levant countries. And S&P has been covering Islamic finance for a number of years. Before I joined, for example, I think the first rating that S&P assigned to a sukuk was back in 2002 with the Malaysia Global Sukuk. So I discovered Islamic finance at that time, and I was really interested to work in this field.
But before S&P, you never heard of Islamic finance?
Before S&P, I never worked on Islamic finance. So I obviously heard of Islamic finance as an alternative financing or finance model, but I've never worked on it properly.
Right. And then at S&P, how long did you spend in your first stint with them?
I left S&P towards the end of 2010.
Okay.
And at the time, I went back to Tunis I worked for the AFDB, the African Development Bank. It was a great experience, and I had the opportunity to cover sovereigns in Africa. I was in charge of the internal sovereign risk management at the AFDB, and I was also exposed to some of the developmental challenges in the continent. It was really a great experience.
Amazing. And why did you leave the AFDB?
No specific reason, but in 2014, I went back to S&P, so back home, to cover financial institutions in emerging markets. And I was appointed as the global head of Islamic finance at the time. And at the time, also AFDB was relocating to Abidjan. And obviously within that relocation process, I decided that probably it would be a good experience for me to go back to S&P.
Fair enough. No, that's fair enough. And so now, what do you do at S&P? I guess you've been head of Islamic finance, right, since 2004?
Yes. So now I lead S&P Global Rating cross-practice analytical thought leadership initiatives and credit rating activities in Islamic finance sector globally. And that involves covering sukuk issuance globally and also Islamic financial institutions. I also cover financial institutions in emerging markets, particularly in the GCC and Africa, and also the North Africa, obviously, and the Levant countries, plus Turkey. And I'm also involved in digitalization, including crypto, CBDCs, and digital bonds. And that's a space that we started to cover in S&P a few years ago. And now we have a full team working on everything related to the digitalization of the market, which is really a very interesting space, and where you could see some crossover between digitalization and Islamic finance and digital sukuk, for example.
Great. So, Mohammed, just leading on to that, what does your day-to-day work look like? Do 2 days look the same, or is it very different?
Right. What I do on a day-to-day basis, that's a good question. I obviously participate in committees on banks and sukuk. I spend a lot of time writing all the thought leadership report on the Islamic finance industry, banks in emerging markets, and also digitalization. And I can tell you there's a lot of effort that goes into that, together with my colleagues and on the analytical side, and also the editors and all the stakeholders involved. I also participate to the outreach effort of S&P Global Ratings around these topics, and that involves speaking in conferences and also speaking in interviews and trying really to convey the message and S&P opinion about the developments in these industries.
Amazing. And Mohammed, maybe if we take a little step back for our audience who may not be familiar with like rating agencies and ratings as a whole, maybe it's like a two-part question. The first is like, what do rating agencies actually or specifically do, and why are they important?
Mm-hmm. Right. We at S&P Global Ratings, we have been serving the market with our independent and objective credit opinions on issuers and issues, and that includes from sovereigns to corporate to financial institutions to developed markets, emerging markets, Islamic finance, and digitalizations. We do also publish thought leadership report explaining our view to the market and how we come up with our view. So, for example, when we assign rating to sukuk, we typically publish a report together with the rating on the sukuk to explain how we came up with the rating, where we see the risks, what has contributed to our rating decision. And in addition to that, we publish all the thought leadership reports that I hope the audience is familiar with. In the Islamic finance space, for example, we publish a sukuk market outlook, an industry Islamic finance outlook, and every time there's a significant development in the market that could lead to some implication from a credit perspective, we try to convey our view and our opinion to the market.
And then the second part of my question is, why do you think ratings are important?
I think we contribute to improving the transparency in the market. I don't know when was the last time you looked at the legal documents of a sukuk, but these are typically hundreds of pages of legal documents that may be very complicated for people that are not familiar with them and that are not used to read them. And through our rating and through our reports, we try to contribute to the transparency on the market, and we try to explain our view on the relative creditworthiness of these instruments, for example, and how we came up with that opinion.
Yeah, and I guess like they're important for like when you're buying or selling sukuk, right? At an institutional level, they're like really important as a
that is something that is outside the analytical remit. So that's why I'll refrain from commenting on it, because as you know, I mean, at S&P, global ratings and rating agencies in general were regulated, and we have very strict rules on what people can and cannot do. So I sit, for example, in an analytical role, and that includes a certain number of restriction on what can and cannot be done.
But like what I'm saying is like different market players will use these ratings, right, for their own analysis or for their own activities. So they use everybody in the market is what I think is interesting. But Mohammed, when we talk about the Islamic finance industry, you know, you started at S&P, what I think you said in 2006, so nearly 20 years ago. And obviously you've been researching finance in general and Islamic finance for the past 20 years. And then if we look at the Islamic finance industry over the past 20 years, you know, we've had guests on talking about historically and also in today's market. But if we look at right now, Mohammed, before we get into like sukuk and what's happening, how would you characterize the industry at this point in time?
Right. It's an industry that has been developing for the past 50 years. I think it started at around 1975 with the creation of Dubai Islamic Bank. It went from zero to $3.3 trillion at the end of 2023. It went from an industry where you had only one financial institution to an industry that has a financial institution industry that contributes to around 60% of its asset, a sukuk market industry that contributes to around 30% of its asset, a fund industry that contributes around 7% of its assets, and a takaful industry that contributes to around 3% of the assets. It's an industry that has been experiencing very rapid growth for the past many years, and we think that this growth will continue, helped by the good economic performance of the core Islamic finance markets where the industry has started. But at the same time, it's an industry that had difficulties in attracting interest beyond its original market, and it had a concentrated growth. So if you look at the driver of the growth, they've been driven by the likes of the GCC, for example. They've been driven by the likes of Malaysia. We've seen some attempts to develop the industry in places like the UK, in places like North Africa, in places like the Central Asian countries. But the success has been differentiating depending on these places. And that's why if you look at the industry today, and if you look at the distribution of the industry asset today, and compare that same distribution with, say, the distribution a decade ago, you can barely see any significant movement. And we think that part of that is related to the fact that the industry has struggled to show an economic added value beyond its Sharia compliance. I mean, Sharia compliance, obviously, I mean, if you look at the market out there, you would have people that would be only interested in Sharia compliant products and that are ready to pay even a markup compared to the conventional products just to bank or to do things in a Sharia compliant manner. But you have also a significant portion of the market that would have a preference for Sharia compliant if it's offered at the same economic conditions as the conventional market. So that's why when you look at the distribution of the industry assets today, it's still pretty much concentrated in the original territories.
I mean, Mohammed, if we take it like if we take statistics out of it, anecdotally, you mentioned about a decade ago, and I agree with you. Like if we compare today to 2014, there was a lot more activity. You'd see a lot more news headlines. You'd see a lot more people getting involved in Islamic finance. Would you say part of this stagnation, I don't want to call it a decline, but a stagnation is down to the lack of innovation in the industry?
It's not really, I mean, it's not really stagnation in the sense that when you look at the growth of the market, it's been growing and it's been growing fast. But the market, the Islamic finance as an industry has been struggling to attract interest from the likes of the UK, from the likes of Africa, from the likes of the former Soviet Union countries. And that comes down to the added economic value of the transaction. I'm sure you remember a few years ago the headlines about the potential contribution of the sukuk market in resolving the infrastructure financing deficit in Africa. Now, have we seen sukuk being used significantly in the financing of the infrastructure deficit in Africa? The answer is no. In the UK, for example, I think the government has announced its sukuk in 2008 and ended up tapping the market only in 2014. So economic added value, complexity of the transactions are the key two factors that have prevented the industry from really expanding beyond its original territories.
Yeah, I was giving a presentation a couple of weeks ago to a halal dinner club where there were people from financial services, practitioners, and other industries. And when I was doing research into Islamic finance, and you actually look at the IFDI report, which is published by Refinitiv, they showed Islamic finance assets compared to global assets, and it's not even hitting 5%. And Islamic finance collectively, globally, is like I think worth the same size as Latin America's economy, which is like say somewhere between $3 and $5 trillion. So it's still very, very small compared to the wider financial market.
Yes, it is still very small when you compare it to the wider financial market. But again, it's been growing rapidly. And the 3.3 trillion that I talked about exclude countries like Iran, for example. And the reason why we're excluding Iran from our statistics, it's because of the volatility of the exchange rate of the country that would make the credit story of the industry extremely difficult to explain, because you would have a sharp increase when the currency appreciates and then a significant decline when the currency depreciates. So that's why we decided to focus on the other core markets. But if you add Iran, that's almost another $1 trillion that is added to the total size of the industry. But it's true when you look at it compared with the global financial market. For example, when you look at the sukuk outstanding compared to the global bonds outstanding, it's still a very minimal fraction of the market.
Yeah, speaking about sukuk, Mohammed, I know you've written a lot about sukuk since your second stint and even your first stint back at S&P. There's been a lot of challenges in the sukuk market, I would say, probably over the last, even say over the last decade. You know, you've had scandals and you've had challenges from certain regulating standards. I guess the one that comes to my mind in 2000, if we take it back the last 10 years, there was one of the biggest ones was Dana Gas in 2007. I mean, for our listeners, could you explain from your perspective, like how profound was Dana Gas's
Mhm.
sukuk debacle, I would say, on the market?
Right. Before speaking about Danagas specific case, I think it's important to go back to how the sukuk market has developed over the last
Yeah, sure.
many years. So you're absolutely right. If you look at the numbers, they point to a very strong growth. 2014, the total outstanding volume of sukuk was around $345 billion. 2023, 10 years after, this number is $944 billion. So there've been a significant growth. But again, similar to the credit story of the industry, the growth was concentrated in core countries. We've seen there sporadic issuance from non-core issuers. I can think of more recently, I think we've seen IRCAP, we've seen Air Lease Corporation. Prior to that, back in 2009, the first company, the first Western company that has tapped the market was General Electric with their General Electric Capital Corp sukuk. We've seen the UK tapping the market. We've seen Hong Kong, more recently Philippines, also a number of sub-Saharan African countries that were helped by the likes of IDB, Islamic Development Bank, and ICD, Islamic Corporation for the Development of the Private Sector, to make it to the finish line. We've seen also some interesting developments throughout the year. So I wouldn't use the word scandal. I would use the word interesting developments in the industry. So, for example, in 2007, you remember the front page of the FT with Sheikh Taqi Osmani saying that 85% or more of the sukuk issuance were not compliant with Sharia. And that was due at the time to the fact that you had an Islamic structure, and on top of that, you had a guarantee from the sukuk sponsor. And my understanding is that Sheikh Taqi was questioning this guarantee because it prevents the principle of profit and loss sharing from taking place according to his view. Now, and after that, we've seen the issuance of sukuk using the wakala structure, where you had no longer a coverage or contractual obligations to cover the periodic distribution, but you had an obligation from the sponsor to provide a liquidity facility in order for the sukuk to be able to pay the periodic distribution amount. And then this liquidity facility became an optional obligation instead of being a contractual obligation. So it became an option because some also scholars were questioning the validity of that. And then we've seen the hybrid structures. And more recently, we've seen the adoption of Standard 59 and now the proposal of Standard 62. Now, coming back to your original question about sukuk default, if you look at the market over the last 20 years or more, there have been very limited instances of sukuk default. And generally, these instances were accompanied with a default of the sponsor on all its financial obligations. So they were not just sukuk specific. But the case you mentioned is a case that first S&P Global Rating did not rate that specific sukuk. So I'll limit my comments to what we've seen and what we read in the press and publicly available sources of information. What we've seen there is that the sponsor of the sukuk has used the shift in the requirement of the Sharia to trigger the restructuring of its sukuk. And frankly speaking, when you have big movement in the market and big changes like the ones proposed by Standard 62, you cannot totally exclude the scenario where issuers that potentially have been struggling, for example, with the repayment of the sukuk, would use the change in the standards in order to trigger the restructuring of the sukuk. But when you read the legal documents of sukuk, and I can assure you that we read them when we look at these instruments. When you read the legal documents of sukuk, you cannot change the contractual obligations after you issue the sukuk without going back to the investors and seeking their consent.
Yeah, I mean, like that. I guess when I remember the story happening at the time, when I was working at the Newswire, like it was quite profound. Like a lot of people were panicking that this could be really bad for the sukuk market and the way they handled this. I mean, they said I think the way they communicated that to the market was a little bit amateurish, and it kind of tested the legal system of the UAE with regards to like dealing with potential default of a sukuk. And like you said, like that hadn't been the case before. I mean, for the Islamic finance market, from a confidence perspective, how profound was that?
You mentioned an interesting point, which is the untested nature of these instruments, and you probably will be surprised when you hear me saying that. I mean, sukuk default is something that could help the industry because it would show to the investors how the legal documents work in practice. It would show whether what is coded in the legal document is working as up to what was expected by the investors and by the issuers when they have issued these instruments. And again, we have had very limited instances of default in the market, and that's also related to the fact that sukuk today, when you look at who is issuing the sukuk or who is dominating in the issuance of sukuk, you would typically find the sovereigns in the GCC and in Malaysia, Indonesia. You would find the large corporate, the government-related entities that can afford to go to the market and raise significant financing amounts through the sukuk as an instrument.
Mohammed, I want to go a little bit. I know you've written about this before, but I don't know if I've told you, but I recently attended the AOIFI conference in Bahrain a couple of weeks ago, and it was my first time attending an AOIFI conference, and it was very interesting talking to the people there. And AOIFI, which for people who don't know, are basically a Bahrain-based Islamic finance standard setter, I would say. They're not taken by everybody and they're not adopted by everybody, but they're seen as a best practice for the industry, trying to come up with standards from accounting and auditing and a Sharia perspective. But like I said, I went to their event and they've come under a lot of criticism, I would say, maybe some of it fairly, maybe a lot of it unfairly, particularly over two standards. I know, so AOIFI's been there since 1990, but really they only became quite taken seriously because the UAE Central Bank, via their higher Sharia authority, which was established in 2018 or 2019, if I remember correctly, uses AOIFI standard or adopts AOIFI standard as law for Islamic finance activities in the UAE, which is obviously a major Islamic finance market and a sukuk market as well. I know you've had your issues with, no pun intended, with Standard 59 particularly. What exactly do you have an issue with Standard 59, maybe?
Right. First of all, we have no issues with any standards. I think that's an important caveat.
Yeah.
And the fact is, I mean, if you look at many of our previous publication and even our discussion out there in the market, we think that standardization is a good thing for the industry, and we still think that standardization could help the industry unlock major avenue of growth. And we can discuss later on about, for example, digital sukuk and how standardization could accelerate the adoption of digital sukuk.
Great.
And the reason why standardization is important, it's because in today's world, if you look at an issuer of sukuk, they are presented with different options. Option one, you do a conventional bond. I mean, everyone knows how to do that. They've been doing it for many years. They know that the money would be in the account by, say, a week, 2 weeks, etc. They know how much it's going to cost. Option 2, to do a sukuk for first-time issuers, you need first to adjust your legal environment, you need to find assets that you can use, you need to find the proper structure, you need to go and discuss with the Sharia scholars, and etc. And that process could take a lot of time and could push some of the issuers to walk away at the end because they wouldn't see the benefit of spending that amount of time in order to arrive to a situation where at the end of the day what matters is that you want to raise funding and you want to finance a project or a company or etc. So, and this is where standardization could really help in terms of simplifying the process and making it easier and more appealing for the issuers to be able to tap the sukuk market with the same speed and celerity and costs sometime as the conventional market. Now, Standard 59. So Standard 59 had a marginal impact on the industry. It had a marginal impact on the industry because Standard 59 came in to formalize a requirement that was already there, which is the requirement of having a minimum tangibility ratio. Now, what changed is that the requirement to have the minimum tangibility ratio was just at the inception of the sukuk. And this is for the hybrid structure where you combine tangible assets with commodity murabaha, for example. So the tangibility requirement has always been there. And if you look at even the structures that were issued pre-Standard 59, you would always see that there is a minimum tangibility ratio of 51% or sometimes more in the GCC, and sometimes less in Asia and Malaysia specifically. Now, once the sukuk is issued, no one checked throughout the lifetime of the sukuk that the tangibility requirement was respected. And the fact is, in Sharia and as per Standard 59, if the tangibility ratio drops below the threshold, then the instrument is no longer considered as a sukuk, but is considered as a quasi-debt. And in Sharia, you cannot trade debt unless it's at par value, as we understand it. So Standard 59 came to formalize the requirement of tangibility throughout the lifetime of the transaction. So now you have in the legal documents specific mentions and clear mentions that at any point in time, the sponsor has to demonstrate that the tangibility ratio of at least 51% is respected. And you have provisions as to what would happen if the ratio were to fall below the tangibility threshold. And here, typically, what we have observed in the legal document of sukuk is that when the tangibility ratio drops below 50%, but is still above 33%, typically what the legal documents require the sponsor to do is that they should work with their Sharia advisors to come up with a solution. Obviously, you have to go back to the root cause of what has caused this ratio to go down in order to come up with a remedy to that situation. But if you look also at the legal documents, there's no revaluation of the assets. So there is no risk of tangibility event happening unless there is a destruction of one or more of the underlying assets. And what the legal documents also tell you is that if the tangibility ratio drops below 33%, then because the sukuk would be considered as a debt instrument, it has to be delisted from the market. And typically, the holders of the sukuk would be given the option to ask for the early dissolution of the sukuk and for the money back before the transaction. To unwind the transaction immediately and not to wait until the maturity of the transaction. So this is Standard 59. So it didn't really disrupt the market. It disrupted the market for a couple of months until the lawyers figured out an acceptable language to put the new requirements and to comply with the standard. Standard 62 is a different story.
Yeah, just before we get on to Standard 62, I forgot to mention that I also I was invited to a supplementary workshop by AAOIFI on sukuk, and we went through a lot of their standards, and it's exactly what you said, and it kind of amplified to me or highlighted to me how much work goes into, despite our criticisms of the sukuk market, or it really amplified to me how much work goes into issuing sukuk from a legal, from a Sharia perspective, from a credit perspective. There's a lot of work which goes into going into a sukuk, and it just made me appreciate how important it is from an accounting perspective, from a legal Sharia, all of these things. It's a lot of work, and as you said, like for example, at the workshop, we had a gentleman from the Central Bank of Azerbaijan who are trying to introduce Islamic finance, and to as you said, like about legal changes and regulatory changes. It's not an overnight thing, and it's not a quick thing in an emerging market. And yeah, it just really like showed to me how complex sukuk can be if you don't have the right infrastructure in place.
Exactly, and the easiest way to appreciate that, look at the legal documents of a bond. So the prospectus is typically 200, 250 pages. Out of that, you have maybe 30 or 40 pages that really include the key legal provisions. A sukuk, the prospectus is, typically the same size, 200, 300 pages. But in addition to the prospectus, you have a certain number of Islamic contracts that are extremely important because this is how your transaction is supposed to work. These are the contractual obligations of the sponsor. These are the recourse mechanisms that are available to the investors. And when we analyze sukuk, we look at these contracts. We have our criteria for rating sukuk that is available publicly. And when we rate sukuk, we go through these legal documents and we explain to the market in our publication how we came up with our opinion.
Yeah, and I just think it's really important to show like sukuk does take a lot of work, and I guess the big issue at the moment is Standard 62. And it kind of, to me, Mohammed, like I know you and I have made different disagreements over this. It kind of like shows the little bit of the dichotomy in the industry that, sukuk theoretically is supposed to be an equity-like instrument, but the new standard is showing that, the way that sukuk are practiced in the market is like not the reality. But I guess maybe you've got a different opinion.
Right. So Standard 62, as you rightly mentioned, comes with a proposal for significant changes in the structure. Now, a key requirement of the standard is that the ownership and the risks related to the underlying assets should be transferred to the sukuk holders. So today, what the sukuk holders are buying when they buy a sukuk, they buy the contractual obligations that are offered by the sponsor to repay them. In a Standard 62 world, they buy the underlying assets and the risks related to the underlying assets. We think that this could affect the market in several possible ways. The easiest one is sukuk may become more expensive than conventional issuance because you know that, for example, when you sell assets and when you sell, let's take the example of real estate assets. Real estate is one of the main industries where sukuk are being used because you have these underlying assets. When you sell a real estate asset, you have to incur a cost of registering the asset. In countries like the UK or like France, the authorities have introduced adjustment to their legal environment to avoid that double taxation, because that double taxation could make sukuk more expensive than conventional issuance and uneconomical from the perspective of the issuer. Second potential risk is that investors may be exposed to asset-related risk. Some of them, like the total loss event of the destruction of the underlying assets that can no longer be covered by the sponsors, or investors may be exposed to the market value of the underlying assets. And third, you have some potential legal issues in countries where sovereign assets cannot be transferred to foreign investors, for example, because that could be perceived as a disguised privatization. And I recall a few years ago, Tunisia, for example, wanted to issue a sukuk, and they and some of the questions that were raised by the market at the time is that a privatization of state asset. When you use a state asset, put it in a structure, is it an indirect privatization of the state asset? And also in some countries, investors cannot own all the assets. The foreign investors cannot own all sorts of assets. There are some restrictions which could make sukuk more difficult to issue. And frankly speaking, that could lead to a situation where not only the complexity of the instrument increases, but also the market could become more fragmented between the adopters of AAOIFI, the non-adopters of AAOIFI, the adopters of Standard 62 potentially, if and when it comes, and depending on its form, the non-adopters. And that could also lead to a situation where investors, for example, the fixed income investors, they could decide to walk away because this is no longer a fixed income product. This is a sort of an equity-like instrument. And for equity-like instrument, you have a different investor base that have different requirements when it comes to pricing and when it comes to the terms and conditions of financing. So this is why we think that as it is proposed today, the standard could be disruptive for the market, but it remains to be seen what will happen when the standard will come, in which form, what would be, if any, the changes that will be introduced.
I mean, from a Sharia perspective, Muhammad, there's no doubt about it, right? That Standard 62 is more converging towards Sharia.
I mean, no one is. I'm probably not the best person to speak about Sharia compliance because I'm not a Sharia scholar. But when a transaction is labeled as a Sharia compliant by Sharia scholars, they are the expert. I mean, the way we look at it is purely from the lens of the credit risk. What are the risks for the investors? Do we see? Where do we see the relative creditworthiness of the transaction compared with other similar transaction or compared with other financial obligations outstanding? So this is the lens that from which we are looking at these instruments.
Yeah, at the workshop, like I mentioned, I kept saying to them, like, the market doesn't do this in reality, and they were like, we understand that. They said, but we're trying to get closer to the principles of Sharia. And I guess this kind of highlights like sukuk are just debt obligations in the reality. They're not real like profit loss sharing instruments as they should be in the literature.
I mean, if you look at the principle of Islamic finance, yes, it's true that there is the principle of profit and loss sharing. But at the same time, if you look at the funding profile of an Islamic bank, so you have the profit-sharing investment accounts, for example. But have you seen ever a bank serving negative returns to its depositors?
No.
That's a risk that could transform into a liquidity crisis, because if you start serving negative return to the depositors, you would expect the depositors to ask for the money back, and that could, that could transform into a liquidity crisis for the financial institution. But if going back to the sukuk market, there are structures where investors can absorb the losses, and these are the hybrid structures, for example, the additional tier one instruments that are used by the financial institutions, for example, in order to raise money from the market and at the same time strengthen their capital ratio. And here there are situations where the instrument can absorb losses or can be written down if the institution is considered as non-viable. And if you look at the terms and conditions of the AT1 that are being issued in the GCC, for example, you could see that there is an option that is given to the bank issuing the AT1 to suspend the payment of the periodic distribution whenever they deem this is necessary for them. So there are structures that absorb losses. There are structures that are similar to equity in Islamic finance, like the musharaka structure. And there are structures that are closer to the fixed income instruments, like, for example, the murabaha structure, or the structures where you have repayments that are underpinned by contractual obligation from the sponsor of the sukuk.
I guess the other piece of the puzzle here is the buyers of the sukuk, right? Like, majority of them are Islamic banks and Islamic funds, and they're not like venture capital funds with like very high risk appetites. So like they're buying fixed income instruments for liquidity management or to park their money for a certain period of time and then forget about it.
Right. One of the key added value of sukuk as an instrument is that it allows the issuer to speak to a broader investor base. Not only the Islamic investors that would come because this is an Islamic product and they can invest their money only in Islamic products, but also the traditional investors, the fixed income, conventional investors. And if you look at some of the transactions that were issued in the past, you could see that some of them were dominated by fixed income investors, conventional investors. Some of them were placed with Islamic, conventional, and other investors. And this is how the sukuk as an instrument allows to speak to a broader investor base.
Why is it important to have a liquid market, Muhammad?
There's a shortage in the supply of sukuk. I mean, if you look at the number in terms of issuance, so every year you have 160 to 170 billion dollars that are issued in the sukuk market globally. Out of that, there's between 40 and 60 billion dollars that are issued in foreign currency. Now, the demand is much higher than that. And that's why typically investors in sukuk would buy them and hold them until maturity, because they know that they cannot, they may not have opportunities to redeploy the money if they were to sell the sukuk, for example. And that's why when there are episodes of market volatility, you would see that sukuk would tend to be much more stable compared to the conventional instrument. And that's because people are not selling them, they are not being revalued, and they are being held to maturity. And the other issue that the industry is facing is the lack of liquidity management instruments. If you look at the conventional banking space, a conventional bank would have a broad range of instruments that they could use in order to manage their liquidity. For the Islamic banks, that range would be much more restricted, because you don't have a lot of sukuk issuance. You don't have a lot of instruments that can be used by the banks in order to manage their liquidity.
Yeah, so the likes of international Islamic liquidity management in Malaysia is very important, right? The likes of these institutions.
I mean, without mentioning specific names, I think the necessity of stepping up the issuance in the market is required by the industry from the angle of the liquidity management perspective.
Mohammed, I'm just conscious of time. I don't want to take up too much of your time, but there was just two other areas I wanted to ask you about. You mentioned earlier about digital sukuk. Why do you think digital sukuk is a good alternative, and why do you think it should be considered more?
I think that digital sukuk is the future. Digital sukuk is the future because digital sukuk comes with a value proposition of removing a certain number of intermediaries and making the process of issuing sukuk much more efficient and much more cost-effective to the issuer. And that could open the door to the small and medium-sized enterprises that want to raise money in a disintermediated way, but cannot do it simply because it is costly for them, or they have to issue what the market referred to as a benchmark sized issuance in order to be able to cover all the costs related to the issuance. So with digital sukuk, and we've seen it with digital bonds, for example, the issuance of sukuk becomes the matter of logging into a platform, plugging in an underlying assets, and going and hitting the market. And all the investors that are connected to that platform would get the message that company XYZ is issuing a sukuk. If they're comfortable with the structure, if they're comfortable with the risk, they would participate to that transaction. But getting there require certain prerequisites. Some of them are closer than others, and for example, they require having standard legal documents in place. And standard legal documents require standards when it comes to Sharia interpretation. They require proper regulatory framework to make sure that the risks and the obligations of all the participants are clear from day one. They require, and this is something that they share with the digital bond, for example, they require that money goes natively on the chain. And for the time being, we're still in an environment where money is not going natively on the chain. We've seen with some digital bonds, for example, the use of wholesale central bank digital currency, like the digital bonds issued by some of the cantons in Switzerland. We've seen also some digital bonds using another solution offered by a central bank that is very similar to central bank digital currency without being a central bank digital currency. And we've seen also stable coins being issued in some, being used in the issuance of digital bonds. And we think that the prerequisite of standard legal documents, money natively on the chain, regulatory framework, and also enhancing the secondary market liquidity of these instruments, either by opening, for example, the platform of issuance to broader range of investors, or having some mechanism to connect the different platforms, or using public blockchain. That all would be prerequisites for the digital sukuk market to take off.
Do you think that will be like a 2025 thing, or do you think it will take another couple of years for that to...
No, it will take probably another couple of years, if not more.
Yeah, like it just seems like that. I've been reading some headlines about tokenization of sukuk and fractional sukuk by certain banks in the UAE. I mean, I guess you're referring to these kind of things like tokenization and things like that.
Absolutely. Not just tokenization of sukuk, because tokenization of sukuk is a fractionalization of an existing sukuk. What I'm referring to is real digital sukuk. So the sukuk that is natively issued on a specific platforms. And we started publishing on that, I think maybe 5 years ago, on what blockchain as a technology could add to the sukuk market. And we think that this will be the future.
Is that highly correlated to the conventional as well, though? Like, it depends on, because like this is the thing about Islamic finance. It seems like it's a follower rather than a trendsetter.
Obviously, I mean, when you look at sukuk, for example, at the end of the day, the problem that the issuers are trying to solve is how to raise money in a disintermediated way, which is being done also in the conventional space through digital bonds. So if the digital bond market comes up with a solution, then potentially the Islamic finance industry could leverage that solution and could adopt it for the sukuk. But there are some specific challenges related to sukuk as an instrument, like the standard legal documents and the regulatory framework.
Yeah. There was one other area I wanted to ask you, Mohammed, was about ESG sukuk. I know you've written about this and you've talked about how Islamic finance can help the energy transition. Do you still hold the view that post-COP28 and now post-COP29, ESG sukuk will continue to do well compared to, say, traditional vanilla sukuk?
Listen, I think there's a natural alignment between sustainability and Islamic finance. And the fact is, if you look at the principle of Islamic finance, or even maqasid al-Sharia, and you put them side by side with the sustainability, you could see natural connection between the two. And that's why we think that the growth that we've seen in the sustainable sukuk market is something that will not only continue, but would probably accelerate. The reason why it would accelerate, it's because if you look at the Islamic finance industry today, it is concentrated in oil exporting countries. These oil exporting countries are coming up and came up with strategies to reduce their carbon footprint, to diversify their economy. And all these initiatives require significant financings. Part of it will find its way naturally to the sukuk market.
Yeah.
And that's even...
No, go ahead, yeah.
There's even a debate in the industry of how to move from what is Sharia compliant or what is acceptable to what is Sharia compliant and adds value, what is halal and tayyib versus what is just halal.
Yeah, I don't know if you remember back in 2014, but I think it was IFIM, which is part of the World Bank Immunization for Children program. They issued a really innovative sukuk where they used the proceeds to immunize the children. And I thought that was a fantastic sukuk and the way it was done. But I'm just wondering, like, why are not MDBs and other kind of international institutions not taking advantage of this? Why do you think they're not going down this road?
Right. That's probably a question for the MDBs. But as far as we're concerned, I mean, why issuers are not coming naturally for the sukuk market and for the sukuk as an instrument, because typically it's much more complex to issue compared with a conventional instruments. And that's why, even though people know that Islamic finance could bring in something to the table, sometimes they're obliged not to adopt an Islamic finance solution because it's much more complex to be put in place.
Mohammed, as we bring the podcast to a close, what are your thoughts for 2025 for the sukuk market and the broader Islamic finance market?
I think the growth will continue. I think 2025 will probably be another good year for the sukuk market in the absence of any potential disruption from new standards. And the reason why I think that the outlook is rather positive, it's because when you look at the financing needs in core Islamic finance countries, they are significant. Saudi Arabia is in the middle of implementing its Vision 2030, which requires significant investments. The bank in Saudi Arabia require significant financing to continue to deploy cash in the economy. In the UAE, the non-oil economy is doing very well and is expected to continue to do well. And there are financing needs. And you add to that the angle that interest rates are coming down and global liquidity is probably going to be cheaper and more abundant. And that could help from the perspective of tapping the global capital markets, including the sukuk market.
Which market do you think will surprise us, do you think? Do you think there's a new Islamic finance market coming online soon?
I think there's a lot of interest in Islamic finance from many markets and countries. And I think, again, the one factor that could lead some issuers to make it to the finish line is to be able to simplify the process of issuance, to streamline the process of issuance, for example, for the sukuk market.
Yeah, what was interesting, I don't know if you remember, but when the UAE signed its SIPA with the Philippines, one of the key points of that was to help develop the Islamic finance industry. And then obviously Philippines came later with the sukuk. So I guess the UAE signing all of these SIPA agreements could help facilitate Islamic finance in these new countries.
Again, we think that the sukuk market could be looked at as a credible financing solution for many issuers and many countries. For the time being, if you look at what's been happening in the industry, every now and then you have some new issuers tapping the market, but we're still a bit far away from a broader adoption, which would require a simplification and a smoothening of the issuance process. And this is why we think that digitalization, for example, could help, because issuing digital sukuk is probably much more easier than issuing a traditional sukuk.
Very true. Mohammed, tell us any projects you're working on, any upcoming projects you may be working on.
Right. First of all, the audience is welcome to have a look at our website and the Islamic finance section to see all our publication. We're happy to continue to convey our independent opinions and views on the creditworthiness of issuers and issues in the Islamic finance market, and we're happy to continue our contribution to the debate on the Islamic finance industry.
And Mohammed, what's the best way to reach you?
My contact details are available, and I'm happy to be contacted if anyone has any question on our ratings or on our opinion on Islamic finance, but also on banks in emerging markets and digitalization.
And are you active on social media, Mohammed?
No. I'm not really on social media. But again, my contact details are available and very happy to be reached at any time.
I'll link your page in the show notes after our conversation. But Mohammed Damak, this has been a fantastic conversation and really insightful. It's really great to catch up with you after a long time. And I just want to thank you again for coming on the podcast.
Thank you very much for having me, Hassan.